What a day, team. Absolutely insane morning. Tesla opened down at 182, which was lower than the market bias pullback that we were expecting to. And then from there, I have Schwab as well as E-Trade. E-Trade was fine, but Schwab, I couldn't get into my positions. I couldn't do anything. I was probably going to average down on my December calls, but I couldn't even get in. I did sell cash secured puts on Friday. I sold some Tesla $200 cash secured puts for this Friday. I was going to roll them over to 190, and I couldn't get in till about 11:30. So at that point, I decided that I'm just going to hold on to the cash secured puts for $200 to see if Tesla ends up bouncing here. Now, the first thing that I want to say is that we have held this level so far. We've been saying for the past couple of weeks that price was most likely going to pull its way back down into this 185 to 190 level, best or worst case $200. The thing that I did not expect was that this was going to occur so quickly. I thought that we were going to have much more of a consolidation. If you guys have been watching the videos, I thought that we were going to push back up to 240 before rejecting, maybe sell off back down to 205, push back up to 226, and slowly over the next month or so, make our way back down to 190. Instead, that didn't happen. We just plunged our way down in the past 2 weeks, and we did get a really good level to potentially go long if you got in somewhere around 184 to $190. First thing to notice here, though, is that the weekly market bias is still being held. This bounce here is not a confirm of the bottom. I just want to say that. The bounce that occurred today, very strong push up, but we have not gotten a higher low on the BX trender, so we still have more selling pressure. And on top of that too, we have not actually held here for a substantial amount of time. What I'm expecting to happen is if this pullback to hold in this golden zone. And from there, if it can hold in the golden zone, that's where we could potentially bounce back up to 250, 260. Now, the golden zone basically is just the Fibonacci level at the 0.618 and the 0.786. In order to draw this out, all you need to do is find your most recent low, which is here at 170, to our most recent swing high, which is about 263. Now, we talk about this a lot, but if you're somebody who is accumulating Tesla between 170 and $185 and Tesla, ends up ripping within 2 weeks about 48%, are you still going to be buying it up in this zone in order to push us through into higher highs? Most likely not. Instead, you're going to wait until we get much better of a pullback so that you can start to accumulate again. This is Wall Street's strategy, and this is my strategy. Accumulate within the pullbacks, stop loss at lower low, take profit at equal highs. It's very, very simple. When you look at this, we take a Fibonacci swing from low at 170 up to this high of 263. If we go through, you're going to notice that the golden pocket is sitting at the 0.618 down to 0.786. So in most cases, price will pull back in an uptrend into this level. And in this level is usually going to be where we bounce. Back in the day, when I first started trading 9 years ago, I was taught to buy here at this level because that's usually where we're going to bounce, and that we should be setting our stop losses underneath the golden pocket. And I will tell you that that does not work now because big money knows that a lot of people do that. And so instead, they will purposefully drive price through a support like we saw today, tag everyone's stop losses, and then let the thing completely bounce. So instead, on these big pullbacks, what I like to do is wait for price to pull into the golden pocket. You can buy at the golden pocket if you want, but what I like to do instead is sell cash secured puts into the golden pocket. The reason for this is that I will collect premiums until there is a confirmation. So I will just continue to make money and collect premiums until we actually find the bottom. Then I can decide to buy directional calls like I've been doing for the past couple of months. And if that doesn't happen and price does break $170, because no matter how much you love Tesla, you have to understand that we have to be objective. Price could break that level. So what are we going to do if that occurs? If price actually breaks and you're not a long-term investor, you're a trader, then if structure breaks, then we're going to be out of this, and this is not going to be a good sign. But I could be selling cash secured puts into that and limiting my risk. So that's personally what I'm doing. What I hope is going to happen is that price, if it's either going to push back up to 210 and reject within this level tomorrow, or if we actually have enough buying pressure, we could move our way all the way back up to 225, 230 before a potential rejection. But on the daily chart, I need to see higher lows on the BX trender before I buy the dip with any type of directional options. One last thing to talk about, and I have been doing standalone videos on most of these stocks, is that big money did buy the dip today. Alpha Golds, which they can always be wrong, right? Hedge funds, they go out of business all the time. But we saw a lot of Alpha Gold flow, and Alpha Golds are one of the strongest alerts that you can get. We're lucky in most cases if we get 1 to 2 a week. And today we got one on Apple, one on AMD, one on Coin, one on Nvidia. So that's 4 in a single day. And the fact that they are buying the dip on the pullback into weekly market bias is a very, very good sign. I hope this video helps, guys. Thanks for all the support. I'll see you next time.